Alright everyone, welcome to another video of mine, and in today's video going to be going over understanding SMT divergences between NQ and ES, or between like gold and silver, or anything like that. So the first thing you want to do is go over to the top of the chart and open up a second chart here. So we have NQ here on the left, ES on the right. Let me remove all these drawings. So NQ and ES move pretty similarly, but sometimes, like yesterday on market open, ES, as you can see right here, this is like market open, this is market open candle, it took out this high, and this high here was the 735 candle. Here's the 735 candle. NQ did not take out that high, so here we have a SMT between NQ and ES at the highs, or you could say we have an SMT at the highs if you mainly trade NQ. So what this means is price failed to make this high, so you have this SMT, and now price will go lower. So if you have, let's say, an SMT at the lows, let's find an SMT at the lows real quick. Alright, so I just found another SMT, but this SMT is at the lows. So on NQ, we have this low here that was made on ES and NQ, of course, and ES took out this low, and NQ didn't. Any SMT at the lows will be a bullish SMT. Any SMT at the highs will be a bearish SMT. And the way that we're looking at these ones here, these are called external SMTs. So basically, it just means that they're happening on like a wider range. And there's also something called internal SMTs, and I'll show you one of those right now. Alright, so I just found two internal SMTs, and they're both bullish SMTs because they're at the lows. Of course, if we had an internal SMT, let's just say at this high between these two highs, that'd be a bearish SMT, and then you could use that as a confluence for a price to trade lower. But in this example, we have two internal bullish SMTs because they're at the lows, so you could just say SMT at the lows, but it is an internal SMT because it's not on this higher time frame. You're not looking at price between like this low and this low. You're looking literally something like this. So as you can see, NQ made this low, ES made this low right there we go, and ES took out this low, but NQ did not. So we have an SMT at the lows, which makes price go to the upside because it's a bullish SMT. Now, you don't want to use bullish SMTs or bearish SMTs, like any SMTs, as a confluence on its own to trade. You kind of want to like add it to a confluence. So like yesterday, whenever we had the market open and it created this SMT, this bearish SMT because it's at the highs, you also had price respecting this bearish gap, so you could get an entry off there, or you could just enter it off this, where's it at? It was this 1 minute, the second displacing candle, because you had this, you had this inverse here, and then you could have entered on this. Let me just get a new one. Bang. Bigger stops above both gaps, and then just target that low. That's just a great trade there, 2.5 RR. So hopefully you guys understand SMTs now. If you have any questions, put them in the description. Join the Discord as well. I will literally one-on-one anyone. All right, like and subscribe. More videos coming out soon.